Welcome, everybody. We have made this fishing trip open to the public for those who maybe aren't aware. So this could be a little extra lively. You can see some names you don't recognize in the chat. That is all okay. So this should be a lot of fun.
So JVC, I've got a question. What platform is that?
Oh, this is the Lee Harris platform. It says so right there on the screen.
Oh, how about
that? Lee is a platform.
I always thought of Lee as a soapbox more than a platform.
Aren't those kind of the same thing?
No, they're not.
Yeah, I approve. So I see we do have a few new names. So some names which I recognize from the Facebook group, and it's because Jeremy, our surprise guest host, spilt the beans.
That's spoiled the surprise. To be fair, though, I never warned him that it was usually kept secret until the big reveal. So it's kind of my fault.
Okay,
that was my bad. I thought I forgot the Facebook group had public people in it. I thought it was like mostly people.
No problem.
People. Yeah, slightly vetted, but nicely moderated. So just to set the scene for the people who aren't members of Trading Research Group, what we do every Thursday, we do a kind of live trading event where I will typically trade one of my setups, which is based around the initial balance of the ES. So that's why we open it at 9:15 Central. So we've got 15 minutes to kind of set the scene. Jeff, my co-founder, will also do some price action-based scalping. We kind of riff backwards and forwards for an hour or two on our live accounts, depending on what the market gives us. But what we also do from time to time, our members are always welcome to do their own screen share. And it's kind of like mini ad hoc feedback, private coaching, Jeff and me. But also the good thing about this is if you trade and you actually verbalize what you do, you talk about your process, you talk about what you're seeing, A, it slows you down, B, it gets you thinking really, really, really hard about what you're actually doing. And it's a great learning exercise. It's why if you ever watch, police chase 911 type programs, the police are doing a commentary when they drive. It's the same thing. It shows awareness of what you're doing. And if you don't trade with a process, you're going to struggle in our experience. So Jeremy was one of the founding members of Trading Research Group. Long story as to how this came into being. In 2019, he took a course which Jeff was running. I happened to be sitting on that course. He has been out of TRG. He is back with us now. But what he does for fun and money is passes lots of trading evaluator combine type tests and just gets funded all the time. So we thought it would be really good to have him captain a fishing trip and talk us through his approach to trading. So Jeremy, if you're happy to, if you share your screen.
Can I ask a quick question while we're handing off to Jeremy? I saw your post, and I know, from personally dealing with you, it's a big number. How many combine evaluations have you passed?
So
like 30, 40?
On that screenshot that you see that I posted, well, I didn't know I was supposed to post, so that's my bad again. That's a 21 passes.
Cool. 21 gun salute, so to speak, right?
Yeah, 21.
That's amazing.
I got 2 right now in the pipeline already.
That's just literally taking other people's money, and you are an artist at it. So I'm really looking forward to this. And I'm going to mute myself. I just wanted to make that clear. It's not like Jeremy's passed 1 or 2. He passes them in dozens at a time. So listen up. I think this might be educational.
Cool. So take it away, Jeremy. Jeff and I will sit in the background. We'll keep an eye on the chat. And we can always dive in, share our screens, riff around what's going on, but the floor is yours. No pressure.
All right. So I don't know if you guys can see my screen. Can I get a quick check?
We can. Yes.
Perfect.
It's very pretty.
So I didn't really trade only because I'm normally trading all in this area right here. So this blue area marked off is the first 30 minutes. So that's the A period. Right now we're moving up into B period. We already have broken the high of the A period. Technically right now I'm going to be looking for a break of the IB, but we are sort of moving up into the higher echelons of the standard deviation ranges right now. So I'm gonna be looking for a pullback. I like to look for pullbacks, only because I just don't like. I don't. I feel as for me as a trader, I just don't like executing at the absolute edges. I kind of like getting a little bit more advantageous entry. As far as order flow goes, I'm just looking for lower lows right now. I'm trying to get something a little bit lower. I do see that we did break the century figure 4,400. We are getting very, very minute amounts of absorption at the top. So right now I'm just waiting. And for those of you watching, yes, I do trade ES. I will be trading the micro contracts. One of the things that I want to be pushing for a lot of, at least for my accounts that I'm going to be using for the funded accounts, one thing I will be pushing is proper scaling. So I do want to make an initiative to use these micro contracts to show how to properly scale an account from the micros into the minis and beyond, because I just feel like as a career professional, it's something that's not really talked about too much. And I feel that that's something that I'm going to be kind of documenting and showing how to, like, A, pass these things, these evaluations, and then B, either just use it to take money or use it to scale accounts. Because let's be honest, if you're in an evaluation account, chances are you don't really have the capital to be trading full mini contracts, because if you're not fully funded properly, the risk of ruin when you're trading a $2,000 account with a e-mini contract is quite high. So
there's a real quick question for you, by the way, Jeremy, in the chat. Trifany is asking if you take the first 100% profit share and then move on to the next combine, or what's your approach for milking these things?
So it depends on what company you're using, right? So UProfit and OneUpTrader do have that 100%, the 100% split up to $8,000, but you do have to get through the threshold first. So you're gonna have to make $2,500 first, and then you get your $8,000. So essentially, $10,500 you have to be able to pull in first, and then you get your 8,000, and then you can just use that other account for hedging risk, or you can use it for just testing stuff or just YOLO trades. But yeah, I do the 100% splits. If you're with Earn to Trade doesn't allow you to just, it's an 80% split from the get. So and then if you make $5,000, if you choose to withdraw, they're only going to give you 80% of that. Or if not, then they're going to switch you over to a live market account. So if you're with Helios, they're going to switch you over to Phillip Capital, or unless if you're with APS, which is their new broker, you'll be going straight into live. So at that point, it doesn't really matter. But to answer the question, yeah, I do the 100% split first, and then I'll do stupid things like hedge accounts against each other, or I'll hedge accounts against my personal accounts, or if I just feel like there's a trade that I want to take, like a 5-to-1 20% win rate type of trade, then I'll use the funded accounts to kind of get my fix on that. But as far as trading goes right now, I'm kind of just sitting on my hands. I don't really feel like, for me, I just don't feel like I'm seeing anything that's worthwhile. If we do get the break of the IB, then that would be great. Statistically speaking, we are going to break that IB at least 90. I think it was like 95% of the time, something really high percentage wise. After that, one of my setups for the IB is we break the IB, and then I'm looking for some kind of retracement down into like the 30 to 50% range. So essentially looking at the upper quartile to mid looking for some type of higher low, or I'm looking at some kind of absorption to get long. So
Jeremy, you're mentioning order flow terms like absorption. From the charts, which I'm seeing there, so you've got a profile and probably delta at price. Is that all you're using to look at order flow attributes?
yeah, I'm just looking at the delta profile and then the volume profile. I kind of it's kind of strange. Like I like price action. I do use some order flow concepts, but a lot of it is understanding, for me, understanding my statistics, understanding my setup, and understanding how ES is going to move, trading it over like at this point thousands of different trades.
And a couple of questions from Andrew. Are you using any trade copying software? And also, how many hours do you spend in front of your screens on average?
No trading softwares. It really depends. So the way that because you're probably thinking like, am I copying my trades spread across my accounts? No.
Multiple accounts at once. Yeah.
Yeah. No, I typically how I like to do it is, so like right now, I'm going to be approved for funding for UProfit and OneUp. So what I will do is I'll trade UProfit in the overnight. I'll trade OneUp in the RTA session. For all the trades that I'm not at my desk, then I'm trading it on my phone through Finomart trading systems, because it allows you to kind of place trades on Rhythmic through your phone. And then what was the other question? Multiple
And
accounts.
How many hours?
Oh, right. I would say in the morning, I'm really in front of my computers for about 45 seconds trading, not 45 seconds, 45 minutes trading the open. And then at that point, I'm probably playing Valorant. And then I'll step away. I'll go to my 9 to 5. And then,
By the way, since I'm guessing plenty of people may not have any idea what the heck you just said, what is Valorant?
oh, it's a game. It's a video game. It's an FPS, first person shooter. That I'm kind of one of those strange traders where, like, if there's nothing to do, like right now, I don't really find myself doing anything. So I'm pretty much going to be playing like COD or Valorant or something right now until something worthwhile is going to happen.
Your 9 to 5 is a medical professional, right? Am I remembering that correctly?
Yeah, I work as a tech at a surgery center, so we do eye surgeries.
Cool. Yeah, appreciate that. Anybody working in healthcare through this thing is doing heroes work. So, but just again, you kind of just dropped that in, and a lot of people missed it, and JVC called attention to it. But I want to emphasize, you have a full-time job and you do this, right?
Oh well, sort of, kind of full time. It's only 3 days. I guess technically it's more.
Well, you guys work 12-hour shifts, and
nah, it's actually like, for me, I just work like 24 hours a week.
Oh, okay, but you have a job anyway, a regular job. That is both a pro and a con, but it allows you don't have pressure to make money, so you can trade your system, right? Isn't that's the idea of other people's money too? Is and just the way you casually threw that out, you can coexist in the trading world and have a job. Is my point, and one doesn't have to impact the other, and it gives you flexibility.
Right. The one thing too, like as a trader, you don't get medical, right? Like unless if you're with some kind of big firm that's going to offer you like a Cigna or something, you don't get medical. So what a lot of traders that I know, at least in Hawaii, do is, because our time zones are so like, they're just really far away from the East Coast. You get up at 3:30 in the morning, 3 o'clock in the morning. You trade the first 45 minutes or the first 2 hours. You chill out on Valorant. Then you go to whatever job you want to choose. You work 24 hours a week. They hand you over a medical plus another paycheck, and then you go and enjoy your life the rest of the week. So you really only work 3 days, and then you enjoy the rest of your week for 4 days. So you work 3 days, 4 days off.
Yeah. If you can build trading into your lifestyle like that, is the point I'm making. That's what I was able to do pretty early on. I was in my teens when I started doing it in my early 20s, and that's your situation as well. And it's just really cool because the reason I'm saying this for you, other people, the new people, and people that don't have the that don't have the confidence and the skill yet to be able to just go into the market and make money. It's a tremendous feeling of freedom. You can always do this, right? Isn't that cool, Jeremy? I mean,
I think so. I think it's an interesting ability where, because I mean, granted, at first it really wasn't like this. It wasn't like I just sign up, spend $150, and then boom, you get funded. But when you gain the ability, especially when you get your screen time and you get your experience in it, it's an interesting proposition to just be like, okay, let's try and grab something today. And you spend 3 or 4 days trying to pass a combine or an evaluation, you get funded, and then you do your thing. But it's definitely an interesting thing to do.
there's a great question for you in the chat. I'm just going to read it to you from Amy, who's another one of our longtime members. Can you speak to how long it took you to get it and get consistent where you're at? Because you really have a methodology and a formula here, and a lot of people are struggling to get to that point. How long did you struggle for? What was that like?
Oh, I struggled for a long time, actually. I struggled for probably because I came from trading low float stocks, right? So the low float runners, shorting the pigs and stuff like that. So I had a little bit of money saved up from those trades, and then I entered the futures market because as you get into the shorting low floats, when you start getting into like the $15,000 to $30,000 or 30,000 share trades, the spread risk alone is going to be like $2,000 on a trade. So my idea was that I'm just going to take this money and go into the futures market because the spread is smaller, and I can just throw on contracts and it would have the same leverage power as the low floats. Well, I was sadly mistaken. I walked in and I lost a whole bunch of money early on, and then I struggled for like a year to 2 years just trading futures until I really delved on deep into like volume profile and statistics and order flow things, and just really staring at the market, staring at screens for days on end. And it still doesn't stop. Like I still do replay. I still I'm looking to express edges. I'm still on Excel using coding in like different, I guess, conditions and trying to match them together to find like probable outcomes, and then finding out, like back testing them, trying to figure out like what is my risk game, what is my trade management, how am I going to exploit this edge. And so it probably took two years of struggling, about 6 months of replay, and then 2 months of deliberate practice, going back over like replay trades for like probably at least 2 years of data. So struggling was 2 years, actually having a plan was 6, and then deliberate practice and really dialing down a system was about 2 months. So a little under 3 years.
Very cool. I was just trying to get to my unmute button. Sorry. JVC, I'd like to hear your comments and Lee's as well, but I just wanted to say, I hear this theme over and over again, and I love the way you just explained it. So you're basically an overnight success, but it took 3 years.
Yeah.
and that's the message. This is hard work, but, listen to the way he just explained that. About odds and an edge and exploiting the edge and testing the edge and practicing the edge. This is the exact right methodology. JVC, jump in. Lee, jump in. This is some really, really good commentary for our newer folks.
Yeah, I was just going to talk to that exact point. There's a saying, there's variations on it, but basically, behind every overnight success is many, many years of hard work, and that's always how it is. I don't care if it's a musician who suddenly overnight is a multi-platinum seller, or a trader, or a business entrepreneur whose first startup goes bananas, whatever. That's not their first. It never the first. They've been at this for a long time. It's always the way. So. Unless we're talking lottery winners, but whatever, that's just random chance, and they always end up worse off than they started. So, this is, you got to give yourself the time. If you beat yourself up because you're 3 months in and you've lost money, that you're thinking about it all wrong. So. Yeah, even lotto winners have probably been playing for years and years and years. Yeah, and trying God knows how many systems and so on and so forth. That's a good point. You rarely hear about somebody who is my first and only ever lottery ticket, and I won the Super Powerball. I suppose it could happen, but
and to Amy's comment, I'm just going to say bingo.
Leo, back in your crate, Lee.
So look, I'm going to get back to watching the first hour's range, the initial balance, because
indeed. So
we're at 9:35 Central.
Yeah. What are you seeing right now, Jeremy? I saw you moving some stuff around. What are you looking at? What are you thinking? Tell us what you see.
So I was just measuring this impulse here from, call it 97.25 to 14. I like it. Okay, so maybe this is probably arbitrary, but after I went over some data over like 2 years, what I found is any statistical rotation that's beyond like one standard deviation is statistically probable that it's going to continue. So what I'm looking at is a retracement of this impulse, this 19-point impulse up here. 30% of that down would be somewhere around here to get long. And my target would then be the high of the IB. So one of the things that I like to do is wait for the retracement. Normally, it has to be prefaced by an impulsive move, and that has to be, at least in the ES in this market, it has to be anything beyond 9 points. So we are 9 points up from this move. So right now, I'm just kind of looking at where I can lean on to get in. Okay, I'm gonna get in. And one thing too that I think is good for newer traders to understand is, unless if you're doing scalping, right, and you're trying to keep your adverse excursion versus your favorable excursion really tight, it's okay to have your stops wider, or wider to whatever relative sense you want to think is wide, as long as your position size fits your account. So like right now, this is only 3 contracts on the micro contracts. But if I lose $90, right? If I win, I'm going to win somewhere around $120. So that puts me technically around 1.4 R, which means that I really only have to be right around 43% of the time in order to break even. 45% of the time, if I can get that, then I'll be profitable. So in terms of being right all the time, as long as you have a good RR, then you're kind of good. So you don't have to be like super, like, you don't have to, okay, you want to be like Lee, you want to be like Jeff, you want to be like super accurate. But if you're a dumbass like me, where we kind of just like, this feels like a good area based on whatever statistic or whatever zone, then it's okay to be like offside just a little bit, right? You don't have to be perfect as a trader, as long as your theory over the long term works, and as long as you have statistics on your side, and as long as, more importantly, your risk management is on point and your trade management is on point, right?
So how I'm going to jump in here, because when I was in a prop firm, what was drilled into us was, if you really get good entries, then your risk management takes care of itself. And we've spoken to this for some people in TRG before who feel the need to scale in, slice in, whatever. Sizing down and building your average position, certainly on a market like ES, NQ is a bit different because it's more rangy, is not a good long-term substitute for really honing in on the best possible entries. And some people do get sloppy. So I'm hearing what you're saying, and I agree with elements of it. Certainly when you can hack combines and things like that as well, because depending on your strategy, there's a lot of drawdown you can play with, and you can get really you can abuse them with sloppy techniques for the greater good. But once it's real money or your own money, I personally believe it is critical that you've really got to get laser focused on your entry. And it's not so much about RR, which is something we don't get that heavily into in TRG, but it's about where am I wrong? And if you can manage risk, so it's the whole point and the whole ethos in a prop firm is if you've got great entries and therefore low risk, then you can trade a lot of size. And that's how you make money, because you don't need big gains when you're trading a lot of size. So it's interesting to hear your approach. I get it. I totally get it. And I do it when I hack combines. But once it's real cash, you've got to get laser sharp on entries.
No, and I agree with that too. I feel like for me, like for what has worked for me is even till like in my personal accounts, like now that I'm up to in my personal capital accounts, I'm up to trading 8 contracts on the minis. I'm still kind of using the same premise based on like order, like, okay, so like this trade right here, I got in because I saw this negative delta print. And my premise is if we get past this negative delta print, then I will be offsides, and I'll be thinking, I have to be thinking about I'm gonna start to be wrong, right? But in terms of, I feel like for me, what has worked for me is really focusing on the R, and then also, to your point, focusing on the entry. So like using this delta print for me, leaning on the delta print, or leaning on like a retracement of the move. That for me has worked. And I guess maybe long term, if when I size up more, like beyond 8 contracts, then perhaps I'll have to start changing, I guess, the way I trade to fit risk profiles because of the size of the account. But I do agree with what you're saying, Lee.
Cool. So when you say you're leaning on the delta print, I missed what you were mousing at. Can you highlight the price level?
Right here. So my entry was 4408, and that's coinciding with this.
So it's the negative delta that you were leaning on, the passive buys.
Right.
Okay. I missed that as well. So I also noticed, I think you took one off. Is that right? I'm not familiar with this platform, so I think that's what you did.
I just removed a limit order to sell, only because I'm seeing a little bit of hesitation on the price action here, particularly around this level. So if we're not going to hold above this level, I'm going to think about scaling back already.
Right. So did you sell one? That's what I thought I saw.
I did. I just canceled the order.
Oh, okay. I thought you took one off, took some profit. So
yeah, because
you're long 3. Okay.
Yeah. Generally speaking, I like to try and collect like at least 4 to 5 points per trade. Depending on how we're doing. I don't think we're going to be able to take that on this trade though. Only because every time we get around this area, we get stalled out. So essentially, I'm just waiting to see if we can make it past the high, if we can make it past the IB high. Starting to think maybe I'm wrong at this point.
Yeah, your delta that you were leaning on so far is holding up. Part of the beauty of leaning on delta at prices, you know quite clearly when you're wrong.
From a price action point of view, I'm in the similar trade, scaling in and out of it a little bit differently, but I still like it long as this high volume node holds here, the bottom of which is like 6 3/4, 7.
Likewise, I'm trading long. The other indices are all trying to push up. So ultimately, I think we'll break the initial balance high,
which is 14. So we have a decent amount from here to there. So this is a classic inside out, is it not, Lee?
Yeah, it's not the best, but
no, it's not the best, but it is an inside out. I'm watching the pullback delta that on Sierra. That's giving me a decent idea where so far it's working, and it's on the buy side here, and that big negative delta is only 2 ticks above us. So what's the where am I wrong point here? For me, it's like 6 3/4, which is quite a ways away. What's your thought, Lee?
Yeah, and we had a price reject pass at the bottom of C period, which is in proximity to some previous daily highs, around 7.5. So I'm looking at that big negative delta at 10. It's the biggest on the session. It's the biggest in the pullback. So looking at the profile as well, we've built up a sort of big set of volume between about 7 and 12.5, 13. So the bottom of the range, I'd say, is 7, 7.5. We're wrong if like you said, Jeff, I'd say 6.5, where it just got a little bit thinner. Absolutely wrong there. Yeah. But right now, I'm liking this for an upside break.
I realize as I get into trading more and more, and I start to aim for different targets and stuff like that, I realize that trading is a whole lot of waiting.
Oh, that's poetic.
Yeah, it's a lot of wait, and then stuff happens really fast, and that is why many people have trouble mastering it. We were just talking about this in the scalping group, how you have to really manage your energy and your focus. Take breaks, go on walks, do push-ups, whatever it is. Because you get seduced into this sitting here watching this long play out slowly, and you got to keep your wits about you as it's moving. I'm taking profits into each push up and keeping a core position, and that takes focus. So that good, for a young trader, you have a lot of wisdom, Jeremy. That's my takeaway so far. You and I have interacted, but this is the first time I've seen you talk to your trading. For a relatively young man, certainly less than half my age, I'm very impressed. That takes
and I think Jeremy's 42 this year.
Yeah, I'm actually going to be 58.
Yeah, right. You guys are messing with half my age. That makes me 116, right?
So
no, really, aren't you in your late 20s, mid 20s, early 30s?
Aren't you? 27.
Right? Yeah, 27. Exactly. That's what I thought. Yeah. I got to tell you, you demonstrate a lot of maturity, like just the way you explain a statistical edge. That is a very mature opinion and perspective for somebody that's 27. You clearly have worked hard to get the get rich quick nonsense out of your head, and I'm really impressed.
I think, Jeremy, if I'm right, you have a background in playing poker, don't you, and sports betting as well, so that's where the probability comes from.
A little bit of fantasy football, trying to game statistics, and then falling on my ass.
Okay.
And that's the most important part right there.
Exactly. You fall enough on your ass, it develops calluses, and you learn, right?
You learn to walk.
It looks like we're going to break this soon because Mayem is having a push-up.
I was also just going to mention, in fact, to the IB break, I don't know that this will come into play, but just worthy of note, we have not yet had a two-sided break this week. So
that's interesting.
Today
didn't get one at all last week either. So,
and today has the structure that could definitely become one with this kind of slow break the top of the IB barely. And gets then go the other way. That could definitely happen. I've been thinking the same thing all morning.
So there's a question from Trevon and Annika. I'm presuming it's one person. We'll speak to that in a minute, because I'm also based in the UK. I'm presuming you're based in the UK. If you mentioned London session, I'll give you my take on this once we... well, here we go.
Yep. I think 15's in play right now, and then maybe even 20. Let's see how 15 goes. That's my first spot I'm watching now. great price action up here. We're getting little baby pullbacks, a couple of ticks, and then the buyers come back in and they lift the ask, and that's happening over and over again. That's a good sign. We're going to take it out.
Yeah, this price rejector is going to go for sure. Here it comes.
Yeah, it's too much
Boom.
volume on top of it. There we go.
Yeah, exactly.
NQ has UB at the high. YM does. Science is going to push up. The question is where?
There was some nice aggression there. We got a one lot single print right below us. Nope, it's filled in.
Yep. Oh, you're getting good at this, JVC.
It's almost like I was taught well.
And you practiced.
Yeah, that might have something to do with it.
Yeah.
I fell on my ass a lot.
We keep seeing that over and over again. This stuff takes practice. All right. I just took off all of them except my last half here. So I've got a couple left, and then I've got targets running. I've got one at 15 and a couple at 18. I think we're going to see 20 here. Let's see how hard 15 goes.
Here it goes.
Yeah.
Yep.
Yeah. Whenever you get, the quarters are always worth watching. The quarters being, 10, 12.50, 15, 17.50. That's what I mean. And we took out the first one and we made it to 16. So the next one in play is 17 and a half. That's the next quarter up.
Wow.
I'm not sure where that all started, but I heard that first in the pit, and the old SP pit. They used to talk about the quarters all the time, but I don't. Does anybody know the history of where that came from? I don't. Anyway, just thought I'd throw it out there.
You mean the quarters, the half dollars, and the centuries?
Well, yeah, that's another way to look at it. But just that in ES, inflection points tend to form at the quarters of if you take a 10, any 10, so 10 or 0, 2.5, 5, 750. Yeah. It for some reason, there's always a pattern around that. It's not always an edge, but it's worth like I said, if we break 15, overwhelmingly good odds, we're going to see 17 and a half. And here we go. I mean, it's not that I have a crystal ball. It's just, that's the way it works. That's, and I've heard this for decades. And I'm old enough to say that at 62, but I never knew the origin of that. Everyone just said, yeah, that's true, and agreed. It's older traders. So anyway, I'll shut up. I just want to point it.
10 tick IB break and a really nice price rejector right here. I wonder, could this be our weak break?
Could this be the short? Is that what you're saying?
Yeah, maybe. I mean,
yeah, I've got my last take profit at 15.25. If we touch that, I'll fill. But I still think we've got maybe more.
Yeah, the thing is, we're in kind of no man's land structurally.
And it looks like it wants to go.
What is around us that we would react to?
Yeah. And there's okay.
I just got
interest up here, but
so I am flat now. That was a nice little run there.
I'm also done for the day. I took Lilu have a 24-hour flash sale, so I opened up a $28 for the Express. So I opened one up.
Did you add another combine, Lee?
Unfortunately, yeah, but I thought $28. I mean,
so you have a whole bunch funded and going right now. Don't you have like a half a dozen that are funded?
Something like that, yeah.
See, people, you can pass these things if you focus on the math of passing them and not necessarily good trading.
And as JVC has experienced, actually, the math of passing, not the maths, let's use English, the maths, the mathematics of passing them. It's where people kind of trip over is they pass it and they go, oh, I'll go back to how I normally trade. And it's like, hello, you were making $300 consistently every day for 10 days. Yep. And now you're not. Isn't this a wake-up call for you? Why don't you just keep doing what you were doing?
Mm-hmm.
Yeah.
So you can make $300 a day in what, an hour and a half? That's all right.
Yep. And the instant I stopped trying, because I passed the combine, like you said, just doing the same old boring thing every day, boom, boom, boom. And it was 10, 11 days, like clockwork, easy. Then I started deciding to, now I need to really trade. Now I need to, get better entries and get bigger trade, whatever. And I did that for a couple of days, blew up a new combine in 2 days or something like that, and did some moderate damage to my new funded account and realized, what the F am I doing? Why don't I just keep doing the same thing I was doing? And the instant I went back to just playing the game, it's just been, $300, $400, $500, $600 a day. Just ding, 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 ding. Nothing to it.
Yeah. And it's less stressful. You're going to work.
Oh my God. Yeah.
And if it's boring,
easy.
This is a good sign. But here's an interesting little test, which is a lot of people, they just like trading when it gets boring. And then it's like, well, what are you trying to get out of this business? Because it's a business. And if you're looking for excitement, this should be a red flag for you. about your goals and your personality, and it's dangerous.
Go play Valorant if you want excitement.
Yes, you should.
That's a really good point. That it's easy to gloss over. Probably that Jeremy said. He trades for 45 minutes and then he just goes and plays Valorant. But no, that it doesn't matter if it's a video game. It doesn't matter if it's going out rock climbing. It doesn't matter, what it is that gets you fun and excitement. But don't get your fun and excitement from trading. Just do not. That is recipe for absolute guaranteed blowing up of accounts.
Hey, just a quick comment on that. Many of you, if you're in TRG, you've heard me talk about one of my mentees who I refer to as video game guy. He's actually a professional video game player and a prop trader who does 7 figures a year. Let's just put it that way, in the trading world and in the gaming world. And I don't know if I've ever mentioned this. It just caught my memory. He keeps a small version of some games right next to him when he's trading. And it will leave the trading world sitting on his hands trading. He will jump into a multiplayer or a first-person shooter and keep his skills sharp while he's keeping the corner of his eye on the market. Yep. And he credits that with keeping him from overtrading, because the desire to do stuff he does in the video game. And his desk literally there's two. It's shaped like a V. There's a video game side of the V and there's a trading side of the V, and he sits right in the middle and can see a little bit of each. And I'll have to see if he'll let me get a picture of that. He's very private, but anyway, I just want to emphasize that it's definitely a mentality of, keep your skills sharp. And like Lee says a lot, and I really think this is a good message in this kind of condition we're seeing today. Entering the market is an opportunity to lose money. Yeah. It's, you're not going in to necessarily make money. So you have to think of the risk you're taking and is it worthwhile? And if you get really good at saying yes and no to that and have something else to do right there, for me, it's watching movies or the Formula One races if there's a Formula One. But, game guy engages in video games. Jeremy, you do video games. So yeah, go ahead. Comment.
I'm just playing in sim here, so I just put on a short because I figure, small risk here. If this doesn't turn out to be the week break, then
if you're wrong, it will be really obvious. 16 and a half will go big time. But
the moment the price projector breaks.
And we got a zero print at 13. So
yes,
there's a nice asymmetrical short trading back down to that and then seeing what happens.
Yeah, exactly. And that puts it right smack dab in the middle of the range again down there, which is perfect. It's just,
and now the initial balance high, which to Fede's question, IB, initial balance, which is the range formed by the first hour of regular trading hours, i.e. 8:30 to 9:30 Central, for E-mini equity futures. It's concept from Market Profile. I'll speak to the question that came up from the person with 2 names, Trevon and Annika. I don't know if they're in the UK. Just say where you are in the chat as well. And so, advice for those who can only trade ES during London session. It's a horrible forex term. I favour footprints, 30-minute rotations of 5 minutes. So to the latter point, I am a big advocate of using, this is what I teach in TRG, of using footprints based on 30 minutes. We can look inside market profile structures and the whole session and the pullback of the session and the pullback 30 minutes, which is a facility which Sierra Chart provides. But if you can only trade UK time, sort of London time, I would say don't trade CME products, trade Eurex, trade CL, trade GC, because you want to trade products where there is a real underlying cash market going on. Because in the overnight session, the CME equity index futures are reacting to the stock markets which are actually open. So that's Frankfurt and to some extent the UK. So you're much better off getting as close as you can to the underlying. And I was in a UK prop firm. We traded Eurex. Get in at 7 a.m. 4 a.m. alarm, and traded bunds and traded Euro stocks. Euro stocks is horribly slow. But unless you're going to scalp for small numbers of ticks, which is okay, it's nice and slow overnight, I would not recommend CME products if you can only trade European hours.
I'll just second. I'm in the States, but I frequently trade during the night here, which is the same hours you're talking about. And gold and oil are wonderful instruments. They're really active because the Middle East and Asia, lots of momentum. They follow structure really well. I think that's a good, particularly, I don't know how the hours sync up at the The pit open of oil is very interesting. JVC's been doing very well with that. Where does that land your time? That lands like early afternoon, right?
9 a.m. Eastern. So for me, it's in the UK, that's 2 p.m. It's perfect. It warms me up for ES. But okay, I see that Trevorn is in the Caribbean. So that's probably GMT -4, I guess. So 2 hours ahead of Chicago. Yeah, the other thing you could also look at is you can look at the Osaka contracts on Nikkei and trade into your evening. So that's MJNK on CQG. AMP off of that, and that trades very much like ES.
Yeah, we got UD at the high now, so don't like it short anymore for now.
Yeah, and look at deep periods just opening. We've got UB. Yeah, we're going to have a push up.
Yeah, had a nice little sweep down there, though. Here's another one.
Yeah, we did.
Yeah, I'm short, but I'm going to add to it if we go up and take out the UB. I'm not heavily short. I've just got a little bit. And from a good spot, I'm at 1675 here. So,
yeah, we still haven't filled in that zero print. So there's potentially a nice trend down to sort of 13.5, 13.
And then higher.
Yeah, and that's right, smack in the middle of the two deltas. It's just below the max on the buy side, sell side is below it, down at 10.
C period,
yeah. I still like 10 as a target here, but 13 obviously has to happen first. But 10's what I'm watching, and I'd love, we're right at 17, so here's the quarter, 17 and a half. We could easily see 20, and I'm just looking at, what's the MBO look like? 20, there's a lot of liquidity up there that's looking to sell, and that could act as a little magnet. We could push up to that.
Yeah, but no big orders in there at all. It's really quiet day.
It's a lot of little people. So that could go both ways. I like this short. I like the sweeps down. Whenever I see sweeps, I want them to be in my direction. But the ideal entry here is probably up at 18 or 18 3/4, maybe. I don't think we're going to get past 19. That's just my guess. I'm looking at just the short-term range. And a regression of the range. That's where I'm getting that from, those of you that don't know what I do.
Here it comes, those zero prints, maybe.
I think so. I'm going to take profits into that. I've got buy orders at 14 and a quarter and 13.5. So, I'm not looking for the end of the world short here, just picking off ticks. Here we go. Okay, just got filled on my first one. Actually, I had it at 75. This giant TV as a monitor is definitely teaching me about precision. I'm temporarily, I'm house sitting for those of you that don't know. So I'm on this 50-inch 4K TV to trade with a little portable computer for just a couple of weeks while I house and cat sit. And normally I'm on a multi-monitor environment that's really ergonomic and helps my aging body. And this is tricky. So, okay, interesting trading right here around 15.5. Look at the bid-ask manipulation here. Can they lift the ask? If they can lift it above 1675, we're going to blow that ledge. I think that'll take out the UB right there. So trading 16 right now. What are you seeing, Jeremy?
Seeing the same thing. I kind of got short. I'm leaning against the 1625 absorption. If we take out the high, then we take out the high. I'm not really too worried about that, which looks like
it's about to happen on the next tick.
It's got to take it out with a lot of aggression, or I'm not worried either. That's exactly what I'm thinking. It looks like there's an attempt at a price rejector now on the pullback. Actually, we had one, didn't we, on the previous period there?
Yeah, but it's still not showing enough exhaustion on top yet. This is like, what's it? Oh, it's not a slow grind up, but it's sort of waterfalling up at the moment.
Oh, beautiful. I just got filled on my take profit. I've got one left now. And I think
here come those zeros.
Here come the zeros. Yeah. So that was nice. So let's see, that's 3, 9, 11 ticks so far, and then one left. So that was again, this is just a Jeff thing, but whenever I see a structural setup like this where it's a potential long short, it's going to break the ledge and then be a short. If the sweeps are in the direction I'm trading, that is a plus, and we just saw that. So even though the trade was going against us and I was taking a little bit of heat, the sweep behavior, the quick downs or the quick ups, taking out a couple levels of the book were all to the downside. And as a price action trader, that aggression to me says, okay, you're on the right side of this, and it played out. But now, anything could happen from here. So how are you managing this, Jeremy? I'm curious. That was a price action trade. You do kind of a meld of market profile and price action. So what are you doing right here?
So right now, I got short. I'm kind of targeting kind of just before this negative delta print. I kind of want to front run it a little bit, but we're kind of getting stuck up here as we get into the negative delta print. So I'm looking at scaling back just a little bit. My stop was like 2 points. So right now I'm looking at.
Are you talking about the big negative delta at 10 1/4, Jeremy?
Yeah, about 10 and a half.
Okay.
10 and a half, yeah.
10
There's one, actually, there's one at, well, depending on which period you're looking at, there's one at half and there's one at quarter.
I'm looking at the delta profile on the left-hand side, so I'm trying to get my head around motive wave as I'm looking at it.
Oh,
Does anyone here use motive wave?
Is that what you're using, Jeremy?
That's motive wave, yeah.
It's the cloud version of motive wave. Right.
No, it's the white label.
White label.
From
white label. Oh, okay. What are they calling it?
Edge Pro X.
Edge Pro X.
I always read
that almost sounds like
Edge Prox. I like that.
Edge Pro X sounds like an escort.
You can wrench Edge Pro X any time of the night.
Exactly. 1-800 Edge Pro X. Sorry, we'll stop it.
Edge Pro.
It's important to have fun while you're trading, folks.
So we got that zero print really nicely, and a few more ticks, and then came right back up.
Trajectory in the pullback, and up we go again.
Yeah, that was a perfect short from the outside in with a really nice, if you were wrong, it would have been really obvious. My MAE on that was 3 ticks. So that was perfect. It went against and it got sold. And it was really nice how the structure telegraphed that with the unfinished business, which it took out by 2 ticks. And that's so classic. But it still looks like it has more to go potentially upstairs there. As we bounce off.
We haven't gone high enough yet. The average true range projection is about 24 and a half. How about that?
I was just going to mention that.
Yeah.
and that's in proximity to a useful number.
And those of you, listening in the audience, listen to what we're doing. We're all looking at the same data, the traded volume and the liquidity around it. But what we're doing is we're in different combinations, depending on who you're listening to. We're looking at the short-term patterns of the price action, or we're looking at the structure, or both. And today is a really good example where they're really complementary. Right now, the price action's really aggressively up, right back up into that weak high that's going to, we're going to go higher. Probably 20s in play, from a price action point of view. So if you're in the audience and we're new to you, we're literally, there's no indicators here. We're all looking at the traded volume and how it's impacting price. I just want to emphasize that.
Jeremy has a few indicators, but he's not been using them. So.
No, he hasn't said, well, this is crossing that.
Exactly. The moving average.
Yeah.
In fact, I'm not certain he does. I think he's got some levels. Oh, there's a VWAP. Oh, dear.
Yeah.
But everything else is delta. So everything else is volume related, and even though
it's statistics. I heard when he was introducing, he looks at a number of standard deviations from a point. That's classic black swan thinking. If you have any background in statistics, that's what I do too. That's what LRCs are all about. Statistically, what's happening right now, and where is it different than right now? And that, there's a lot of different ways to slice that up. But none of those things are trading signals. That's what the rookie mistake that, when it's green, I buy. When it's red, I sell. Doesn't work like that. You have to understand what the tool is telling you. And it's never going to be just red and green.
That's the tool giving the webinar? Or the...
Exactly.
You're
That's
you
the
guys
Edge
don't
Pro
see.
X in action.
Yes.
What you guys don't see is on my fourth monitor, I have my MACD crossover.
Oh yeah. What are the fibs saying? Elliott waves. Let's see what else. MACD.
Moon cycles, man. Moon cycles, bro.
Oh yeah, lunar cycle, totally. I always find it hilarious when Lee talks about lunar cycles because there actually is a perfectly sensible, plausible, completely real, grounded reason why lunar cycles, quote unquote, work.
What is the whole premise behind that anyway? Like you're actually using the cycles of the moon?
No, it's marketing BS. So the lunar cycle is 29 point something days, a bit like a month, yeah, a bit like 4 weeks, 28 days. So what's our calendar based on? Our calendar is based on the moon. And companies report monthly or 4 weekly or quarterly, and economic figures come out at similar levels. So guess what? We're going to see correlation between moves, which are based
And the
on
moon.
macro events in the calendar, which in turn is based on the moon.
Duh.
Oh, it seems so intuitive.
So
Yeah, we have it broken down.
I'm publishing an indicator which is based on the menstrual cycle of the Miley Cyrus. It's as reliable.
Yeah.
I think Britney Spears had been a better one.
I don't know. She's a little on the crazy side, but then so is Miley. So, you know.
So, but then you have to match it up with the correct market, right? So you would just use that same menstrual cycle on NQ.
There you go. Perfect.
But was it Fred Durst first?
So
is the question.
This whole webinar went south like just now.
It really did. So we still got that.
started.
Oh no, we broke the UB. Jeez, I wasn't looking. I totally missed it.
And we
Two
broke
ticks.
in deep. No. That you're looking at D period JVC. D period's breached C period by 2 ticks.
Gosh, I feel old. Nobody remembers old Eminem lyrics.
What was the lyric?
Was Fred Durst first? I was paraphrasing it. You were talking about Britney Spears?
Oh, right.
We are just sitting right here around.
Yeah,
this
YM's
point.
having a push though.
It is. You're right. It's actually within ledge break range, but RTY isn't, and NQ is sitting smack dab in the middle too.
Well, but also look at NQ. Look what's just north of us. We've got 15,000.
Yeah, that's true.
So you know,
Big
what
fat
could
whole
stop
number.
any run up? ES getting to about 20 or 25. NQ getting to 15,000. Then that's enough for everybody. Back we go. I buy that.
I'm looking at the TPO chart that I have the weak and poor highs on, and we still have one up at 4,400, if you recall. It goes back a little ways, but I'm just wondering, what would it take to pop that? That's only 20 points away.
4,400. That's underneath us.
4,440. I'm sorry. Just above it.
Yeah,
actually.
I remember that from a while ago. Yes.
Yeah,
that was a long time ago, wasn't it?
Yeah, it was. I don't even know when it goes back to. I have my TPO view that goes back a ways, and I'm just seeing that. I've been watching that one because we've managed to consolidate this old range of the breakdown. The quote unquote correction we just had. The low of that range was 42, 60, 70, 80, and the range kind of high was right up here, and we're above it now. And so, just from strictly TPO weak poor point of view, 4440 isn't out of the question here.
And that was a level that was in play for
a long time.
Yeah.
Every time we came down off the all-time highs up in the 4,500 range, that's where we paused. So it's a very interesting. Yes,
all the fours are a lot of death.
Has to do with trading werewolves.
Yeah, I'm struggling to find it, but I recall that level. Yeah,
I'm looking at it on my TPO. I don't have it going back far enough in the short-term history because I've got it crunched into the window on this big TV, so I don't know what its origin is. But I'll look when we're not zooming. And my little portable computer that I bought, which is the size of a large pack of cigarettes, does great if I respect the fact that it is not liking to have way too much to do. So it's popped me out of a couple of zooms when it gets overwhelmed.
So here's a good question from Trevor. What are our views on building and trading off composite market profile levels? Personally, not interested. The way I use market profile, I look at a couple of structural things and the statistics of them happening, and I look at aberrations in the profile, like poor highs, runs of single prints. Crunching them together is no different to getting into which time frame's right on the chart you look at. Do I want to look at the last week or month or 6.18 days? If you crunch enough data together, you're going to find levels that suit any argument you want to make. And we're looking at now. So all of these levels are only potential, keyword potential, 36-point bold inflection points. Yeah. So we can have a whole set of levels where people may react, but what matters is the reaction at these levels. But you don't want to be looking at too many levels. And if you're looking too hard at levels, we got too many, or you're looking too hard to find a level where there's a reaction, the big message there is there's nothing to trade. So personally, Siobhan, I'm not interested in crunching TPOs together. I might mentally consolidate day session and overnight just to look at the edges if they're overlapping, but that's about it.
I was just going to say the thing for me that's important are where are the edges and ledges of the recent sessions, and I'll look back to the last few overnight and the last couple of regular trading sessions. But going back any farther than that, there's just way too many variables. I know Merritt and I know his approach, but in some markets it makes more sense. I think that he does that in oil, and I think that makes a little more sense in oil, where there's some sense of supply and demand. But for me, the danger of doing that is you start to look at those things as quote unquote support or quote unquote resistance, and when we get there, it could be totally different. So having them on my radar just confuses me. I'd much rather just watch what's happening right now.
I think the key takeaway from like both Lee and Jeff, and because I did the same thing, right? Like I went through market profile, I went through volume profile, I marked out all of my different levels, like high, low, mid, VPOC, HVN, LVN, fucking multi-composite, 1 month, 1 week, 1 year,
and then
all this
there's
stuff.
nothing left on your chart.
And then eventually it just looks like spaghetti. So the 200 IQ move is like if you just go on like an hourly chart or 30-minute chart, zoom out, look at where there's consolidation levels, and then look at where that corresponds to your volume profile chart, mark out like your high and low of that consolidation level, and wait. Like if you're not sure, like statistically, like what's going to happen, then you wait till it gets to whatever area you think is important and wait to see what it does there. If it rejects it, then do something. If it breaks through, then do whatever it is that you think is best. But yeah, like you're not going to like mark out all of these different profiles and be like, aha, I have found something that no one has found and therefore it's going to work. Like, I mean, it all works. Like if everything works, if it reacts correctly.
Yep, everything works sometimes. We're really getting stuck right around this big negative delta. Keeps trying to push up through it and then just, nope.
So Lee, have you met anyone since you're from London? Have you met anyone from Futex, the old Futex that Nav worked at?
I briefly crossed paths with the ex-risk manager who was briefly in the prop firm I was with. Futex, but then most of them went off and did Axia. And there's one guy in my prop firm who also went off and he paid for the Futex course as and when it was there. They had a great reputation. Not sure why, but they did a good job on building reputation. So the short answer was no. Well, kind of, but no.
Kind of, sort of. I was in the same vicinity, but
same country.
Same country. All right, I'm getting flat. This is getting boring.
Good choice. There's something for those who aren't TRG members, everybody else has heard this a million times. Good trades work right away. If you have to just sit forever and ever and ever waiting for something to happen, maybe it's not worth sitting in.
It's so contrary to the let your trade work nonsense you hear all the time.
Totally.
Look, good trades work right away. It's just simply logic. If you're right, it's working right away. If it doesn't work, you're either wrong or you're early with the idea you have. In either case, you have to assess risk. And it's that simple. A lot of trading you can make really simple. And the problem is human beings like to make things complicated. Simple is better. That's one thing I learned from Stephen Jobs. Simple is really hard work to get to, but you can move mountains when you do. Look at the iPhone. It was a creation in simplicity.
That iPhone's a scam.
Yeah.
I just bought my 12 like a year ago, like when it came out, and now there's a freaking 13.
I don't even use one. I'm an
Jeremy,
Android guy.
The clue was in the number 12 when you bought it.
Exactly.
Isn't it like it's always like the odd numbers that are supposed to have like all the good shit?
That's Windows.
Jesus.
Except it stopped with Windows 7 pretty much.
That would be graphic cards.
Yeah, that too. Yeah, it's amazing. You can really make this simple if you work hard at it. But what trips up so many people is they do the opposite. It's like, they're on a constant search for the perfect tool. And so they have all this stuff and their idea is, well, if all of my stuff agrees, then that's confirmation and I'll take the trade. And the reality there is if all of your stuff agrees, the trade's probably over already. That's the nature of those kinds of tools. They're backward looking. You have to learn to look at what's happening in the traded volume right now, whether it's a dome or a footprint or whatever way you choose to do that. The thing is, I've been trading a long, long time. It's going to be 50 years pretty soon. And unlearning that, because I came from the world of indicators before there was order flow, that took me a good solid decade, and I still struggle with it. I still have old kind of left to right stuff I use that my brain's comfortable with. But for those of you that don't have that bias built in, learn to just read what's happening right now. There's so much value to the information you're getting from the market. It's an auction. It's telling you all you need to know. Tools that give you red lights and green lights are just going to confuse you over time. Remove the crutch.
So it looks like ES is going to have another little push. The question is it going to be 20 or 25? Or 22 and a half?
And do we still have our double break potential here?
I don't think so.
We're technically too far.
Yeah, I was about to just say, not from a structural point of view, but from just a price action point of view, we're accumulating way too much volume up here for the bottom to just suddenly fall out and go the other direction.
Yeah, it's looking so we pretty much made a double distribution, haven't we, so far?
Yeah, we have. Although it's skewed up here at the moment. And,
it's more popular, like 7-Up. 7-Up.
Yeah. The new Algo Box 7-Up indicator.
It's for a new generation.
Yeah.
More bubbles.
Yeah, I think 20 is going to happen. The question is when, but I think we're going to see 20 here pretty fast. And then NQ is about to break its ledge too, as is YM. The only one that's not playing in the party right now is RTY, but it doesn't look terrible. It's above its overnight anyway. So
I think YM will go. So I think 15,000 is the level to watch on NQ.
Yep.
And then that's
20 on ES.
The opportunity. Yeah, and then it's the opportunity for our outside in back into range. Go get lunch. End for the day.
Yeah, I really like a move back to 13, 14 after all the energy we saw there. So yeah, right now I've got an order at 1975. That's kind of my first nibble, and I might play at 1875, but it would have to really dry up here and show some weakness for me. There goes NQ. Now, yeah, we're going to go up. Yeah. Although I'm not playing long. That's a good point. Somebody just private messaged me that. It just feels like it's tired. I'd normally play a ledge break long and then get short into it, but we're just not going up with the kind of gotcha, catch the shorts at the top and spook it up and, puke. We're just not doing that. So for that reason, I'd rather look for good shorts than a ledge break long. So just to answer that question.
I've been long since around 12, 13 for like a final push is how I'm looking at it. But after that, yeah, I'm absolutely going to hang around and see if we can trade back into the range.
Look at the 30-minute right now. Both ends of the period we're in it's trying to decide whether there's a price projector at the top or the bottom. Are you watching this?
Yeah,
Right
but
now,
111's too much volume at the top.
Yeah, exactly.
But the taper at both sides is so pretty, particularly the low. The low is much nicer, 21, 114, 209. You know what I'm saying. But it's funny watching it go back and forth. It definitely wants to go up, but you can see the math playing out as it's happening, which is kind of why I like.
Here it goes.
Yeah, here it goes. I'm going to see if I get filled at 1975, and I'm going to throw one at 1875 too, just for kicks and giggles here.
So NQ is interesting. It's around 95. There are little sweeps down.
Yep.
But I thought, what's causing these sweeps? Is it people getting out of the longs? Is it pushy new shorts? Hard to say, but it's like they're knocking it back by 2 points, but it keeps grinding up.
That is what I used to call, before I was more involved in structure, I used to call that a stealth bid. In other words, there's underlying buying in the market.
Yeah.
All right, guys, I'm gonna head out. Been staring at the screens for about 2 hours now, so my attention span is a 0.
Got work to do.
Yeah. I'm never normally trading this time of day anymore. I'm long since platform closed and I'm doing other things, and I love that. So totally get it.
Quick question for the people in the chat. I think this is something that may help the younger traders there. But do you guys have any drills or advice to accepting risk in terms of being afraid to lose, being afraid to hold winners, being afraid to not hold winners, or being afraid just to accept the risk of your trade in general?
That was a deep question.
It
No, it was a closed question, so we're going to get yes and no.
Yeah.
Every trade has to be greater than a 1-to-1. Okay, so Sergey is thinking about risk-reward ratios.
No problem, Philippe.
So you've had one answer, Jeremy. Or was it a philosophical question?
Oh, I meant that as not a rhetorical question, but a question for the
something
for
to
you,
think about.
JVC and Jeff. What is your take on that?
Oh.
Yeah, I was like, oh, I think he's just being sarcastic. Yes.
Sorry, I thought you were asking the audience.
Yes, likewise.
Oh, my bad. Yeah, no, to you guys.
I understood you were asking us. I was just waiting for you guys to answer first.
I was like, so what's your risk profile like? Yes. Okay.
For me, it's very simple. I for a variety of reasons, some of them are health related, some of them are psychology related. Most good traders are partially insane, and I'm not an exception to that. So I always evaluate my competence in the morning. It's the first thing I do. So I say, how do I feel? Do I feel okay? Am I awake? Have I had enough coffee? Have I had too much coffee? And then once I've made that little assessment of me and how I feel at the moment, then what I'll do is I'll start thinking about how much risk do I feel like taking today? What's comfortable for me? And for me, it's just absolute dollars. I have a circuit breaker. If I lose $150, I walk away, no matter how big the account is. And I know that sounds hard to do, but for me, it's just about, when I'm in the zone, I scalp at 87, 90% winners. And so I know it. And if it's not working, my entire methodology is to stop me from trading when it's not working. That's all risk management means to me, because I know that I can make money in the market. If I'm not making money in the market, overwhelmingly, the likelihood is that something's wrong with me, because my stuff works. I know that. It's worked for decades. So it's always about my competence. And so for me, if I'm making good calls, then the trades are working. I'll keep doing it until they aren't, or I don't feel like it anymore. And that's why I like to scalp. I can do it anytime. But if I hit my circuit breaker, if I sit down to trade and boom, lose $150, I have to go reset my circuit breaker if I want to keep trading and make it bigger. And that immediately makes me think, what am I doing here? Am I trying to buy a market that's going down? Do I have some sort of bias? So for me, it's really about understanding, am I being stupid today? And And I get that that's kind of a more experienced trader's approach, but it comes from the concept that Lee's talked about, and I totally agree with. I've kind of poked this a few times today. I don't go into the market with the idea that I can make money. I can make money anytime in the market, and I know that, and I'm confident about that. I go into the market with the idea that I don't want to lose money, because that's the opposite of what I know I do right. And if that's happening, something's wrong. So that's my answer.
And I'm to pick up on a lot of Jeff's teachings. It's in terms of managing the risk profile, it's all about staying on process and recognizing when you're deviating from process, when the monkey is taking control. And then you use tools like, financial circuit breakers in the platform or the broker to smack you upside the head to try to get you back into sanity. But it's about don't lose money, or lose as little as possible, and don't put yourself in a position where the monkey can take over and boom, you burn 2K because you're in monkey mode, not trader mode.
Totally agree with that.
The thing that a lot of people don't get, that haven't been trading a long time, is it doesn't matter if you've been trading for 5 years or 15 years or 50 years. That still happens. I do that all the time. The difference is it doesn't end the world for me. It doesn't blow my account up. It's either something I'm testing in a combine or a sim, and it's okay, or if it's something I'm doing in real money, I just don't allow it to do that. I know that I can make money, so as long as I don't lose large amounts of money, my accounts will be fine and they'll grow. And that's a really different mentality than the Twitter get rich quick with our tool. You can make $10,000 a day.
The Tim Sykes method.
Yeah, exactly. You really have to understand that, everything you've heard like that is nonsense. There's no real world equivalent of anyone doing that. It's luck. It's like winning the lottery, like JVC says. It just doesn't happen that way. So anyway, I think that's a really important point. Consistency.
For me, actually,
yeah.
So I was it actually ties in real nicely to something that Philippe mentioned about, that everything he's learned so far just lacks validation. And, so my comment in the chat was just how really amazing it is, the confidence that you build up when you do something in the market, you do something in trading with a setup, et cetera, that is absolutely defined, constrained, zero room for creativity. It is boring, right? It is just dull and unexciting, and it just makes money like basically every single day. It either makes money or it loses a tiny bit, or maybe is a scratch. And you just do that over and over and over and over and over. And my goal in trading is not to sit here and trade all day. My goal is not to, be some amazing, mind-blowing trader, showing off Lambos and putting up, 8-figure a year, ridiculous number, whatever. Just nonsense, complete and total nonsense. All I want to be able to do is come in, work an hour or two, quote unquote work. It's enjoyable. So it's hard to call something work when you do enjoy it, and then be done and have the rest of every single day free. And for me, being in California, that means I'm done with work for the day by 8:30 at the outside, usually quite a bit sooner than that. And I have my life free to do the other things that I want to do. And trading just is going to fund that. And I don't need to push, and every time I do push for more, greed kicks in, the monkey takes over, and I end up doing dumb things, or I give back the morning's profits because I chased something. I mean, we were playing around, during the fishing trip here. I was in sim because I just do not trade this time of day anymore at all. I just don't. And I love that I don't anymore. I have my setups. I do them every single morning. Bing, bang, boom. They're done. I shut down. And that has been so freeing.
Yeah. I think having a mechanical process of like what you should be doing, what you should not be doing, restraining it to time frames and restraining it to like a really strict process is really important. And I think like what Philippe was talking about, like having elite confidence in like what you do, that's something that I struggled with for a long time, because I was always afraid, like, okay, my edge is gonna not work today, or my edge is gonna run out next week, or like all of this stuff. And one of the things that I did early on to understand risk and like probability and stuff like that was like I would literally find some things that I could nail down, like whether it's a stat, like we know that the IB is going to break at least 90% of the time, right? So now I have to figure out where I can get in to facilitate that break. And then every single time I facilitate that break, this is probably not what you should do, but this is what I did. But like I flipped a coin every single time I got to that area. I flipped a coin. And if it was heads, I would go long. And if it was tails, I would go short. And then on another account or another piece of paper, I'd write down like my entry. And then if that trade didn't work, or if it did work, I would log that down, and I would literally test my results against flipping a coin. And that really showed me that no matter how good I get, I will never be able to control markets. The only thing I can control is the parameters and the process that I do and my risk. And everything beyond that, you just have to do your best to follow your process. And if the process is correct and it makes sense with your account size and how you manage your trade and your risk and all that stuff, then you'll make money. The edge will show up, the money will show up if you follow that process over and over again. So then at that point, risk really just becomes a formal practice of doing what you do every single day. Just like when you go to your mindless, I don't know how many of you guys actually have a 9 to 5, but for me, like you go to a 9 to 5 or your part-time job or whatever. And for me, I find the easiest job that has the coolest coworkers, and my brain works on autopilot, and I just chill out. And I think eventually when you get your reps in, you get your process in, and you do it over and over again, that's kind of what trading becomes. It's just you wake up and it's just a practice that you do, as opposed to I'm going to get my battle suit on. I'm going to go to battle the markets today.
Ooh, that's a great way to put it. It really is.
Yep. That's something I've heard from a lot of people, usually on sort of the earlier side of their trading business, whatever their profession they're trying to learn, is the whole, gear up for battle type of metaphor. And I didn't really practice that myself, but I got it. And I sort of felt like I had to approach the markets each morning and like get ready and like get into the zone and whatever. And that's just completely gone now. There's just no such thing at all. There's no prep. I mean, I just roll in, sit down a couple minutes, like literally 2, 3, 4 minutes before my setup is officially valid. I sit down, I take a look, and okay, where would I want to play? All right, this looks good up here. This looks good down here. These are the areas I'd be interested. Where are we? What are the edges looking like? Basic stuff like that. And I'm done. It's like 45 seconds of prep, and then I execute, and 9 times out of 10, my trade is done in 30 seconds or less. Sometimes it's a minute or two. And then I go do something else for the next 28, 29 minutes until my next setup is valid. And I do that 3 times for 3 half-hour periods. And that's it. It's just, it's really weirdly simple. And I mean, I say boring, but it is fun. So it's not really boring. I think of boring as something like I dread. And I don't dread this at all. It's enjoyable, but it's peaceful. It's calm. It's easy. And I mean, easy, like emotionally easy. It's not stressful. I don't worry about anything. I don't overthink anything. There's nothing. What's there to overthink? It's just, here's a few handful of things you need to really know, and everything else, just ignore it all. It doesn't matter. I also really like something that Lee says a lot, and the way he says this: what will it take for me to express my idea? And that's just a really interesting way to frame trading. That, I have an idea. I want to express that idea. How much would it cost me if I'm incorrect about my expression of this idea? And so now I'm thinking about risk and, managing the trade, et cetera. And I'm also thinking about where would I enter? Where would I exit? What would it take me to properly express this idea? Because as long as you do that, as long as you trade well, everything else takes care of itself. I actually used to have that. I changed monitors earlier this year. I bought a nice widescreen monitor, but my old monitor, I had a label printed out on the top of the monitor that was a quote paraphrased from Alexander Elder, who wrote Trading for a Living, but it was, your job is not to make money. Your job is to trade well.
Right.
Because then everything takes care of itself. If you just trade well, you don't have to worry about anything else.
So I work with one of the surgeons I work with, nationally ranked like eye surgeon. Like the dude is a badass in the eye surgery world, right? Turns out he also trades. He trades FANG stocks like day in, day out. Like he's like he trades the shit. Like of course it's different from trading futures, but
yeah,
he trades, right? So I was talking to him about trading and stuff like that, and he's like, bro, like trading, and it's funny because he's like 48, but he still talks. Like he listens to rap music, like plays video games. He's like one of the boys. So he's like, bro, like you know what I realized? Trading is like eye surgery. And I'm like, what do you mean? He's like, because like it seems really hard. It makes a lot of money, but when it comes down to it, it's almost like just fixing a car. Like you just have like a whole set process to do, and then you do it, and that's it, and you just do it again. And then I was like, not really. Isn't eye surgery different? He's like, no, because like everyone's eye is different, but the process is the same. And if you mess up on an eye surgery, but you did your process right, then it wasn't your fault. It was just unforeseen occurrences, and you just have to do your best to manage that risk. Not just like, that was one of the turning points of my trading journey, when someone who is successful both in the medical field and medical field that deals with uncertainty and risk, and also is an avid day trader and profitable trader, when they can liken both worlds to a process, and it's about executing that process flawlessly, no matter what the condition is. That's I think that's what a lot of people have to get to. So for those of you listening that are struggling and need to find their way, and if you're not, then cool. Thanks for coming and hanging out. But find your process, man. Figure out an edge, learn how to exploit that edge, and just do that. Just you do that. Don't do anything. Don't worry about what someone else is doing. Don't worry about what's on Twitter. Don't worry about what's on CNN. Don't worry about what's on Wall Street Bets. I know some of you look at it. Just figure out what works for you and do that.
Yep. So I know, Jeremy, you wanted to bounce, which is totally fine. So feel free if you got to run. That's awesome. Lee, anything else you want to do for your fishing trip? Does the captain want to take the wheel back?
Well, while we were chatting, we traded up to 15,000 on NQ, and now we've breached it, and it's gone up to 6.75.
And we hit 19.25 on ES, and that my short filled at 18.75, and we're now 16.75, and I'm a happy short.
Yeah, and YM is just short of 34,750. So I think we might hang around up here for a little while. That wouldn't surprise me if NQ did 8.5 actually, and then I think that's it for the day, and we go back into the range. So not to call.
You want to share your screen, Lee?
Yeah, I could do that. Sharing is caring.
See Lee's lovely screens. Their incredible lack of color.
Oh, that's pretty funny.
Here we go.
All right, bye guys. Let's see you later.
Hey, great job,
Thanks,
Jeremy. Thank you very much. We really enjoyed it.
Yep. Catch you later.
Catch you later.
And great job doing a webinar from a car.
Exactly. You didn't know. He's sitting on a cliffside looking out over the waves.
While eating a Taco Bell takeout.
Yes.
So as I'm looking, well, we don't have a price trajectory at the top of ES. So I think we're going to have a push higher. We've got a price trajectory at the bottom of the pullback. We breached big fat round number on NQ. We're in kind of no man's land on NQ, looking on the daily. It's some previous highs, which were just around 1. YM is teasing us 34,750. Also looking at the daily, there's UB up at the top at that. I think we're going to see a little push from YM as well. Then I think that's it for the run up this morning. Then I'm just going to bounce around the range. That's my take. Let's find out. And look at this. There's not a price rejector there. We can have some fun. We can say, you know what? I want to take a tick out of what would be a price rejector when it comes. I'm going to enter on a stop above me because that 327 needs to get higher than 576 in order for that to potentially be too high. I'm just going to nick a couple of ticks when this happens. Watching the other indices as well. NQ is having a push. Oh, nearly. Come on. Everyone give it a little push. Here we go. Thanks to the 341 in the session profile as well. Just has to fill me. It's like a badly behaving dog dragging its heels.
It wants to go sniff that
boy.
way.
Here, boy. Here, boy. Here, boy. Got some tempting hindquarters for you to reverse engineer here. Come on.
Hey guys, I'm going to let you continue. I have to deal with a medical issue here, so have a good rest of the morning. And
no problem.
And it looks like we're gonna have, regardless of what this ends up doing, it's great trading in both directions. So
absolutely,
have fun. I'll see you guys next
time. Take care.
Okay. Yeah. Thanks, Jeff. Look after yourself.
See ya.
So we've touched this a couple of times. We've only traded about another 15 lots. So I'm in the queue, 45th in the queue. There we go. I got my fill.
Yay.
Yeah. Look, we're going higher now.
Yep.
So NQ, I think it's going to have another little push. You know, where could it get to? NQ likes 3.5s and 8.5s. Don't know why it does. So let's just be mindful of that. And let's watch YM at around 50 level. Look at that. There's 50 in the queue at 50. Ooh, it's a secret signal.
You got some gaps in your pullback too at the top.
Yeah, so the spread widened at the top because stops triggered at the top of YM. Yeah. So look at that. NQ
there goes NQ.
Gone up to 8, but let's watch 8.5. 20 is likely going to, but there's nothing in the MBO.
Is there anything like way up high? Yeah, a little bit.
Yeah, the ATR projection is, I've got the wrong tool up, chart values. ATR is 24.5. So I'm just mindful of that. Let's watch what YM does. I think YM is going to be the controlling factor at the moment. And what we'll do, JVC, we'll have a hard stop at the top of the hour, and then structural foundations will kick off at 1:30.
Yep.
Because I have a minor personal appointment between 5 and 5:30 my time. So 11:30 Central. Yeah, the big block of orders is holding us down. That would be it. All those micros.
Exactly. My micro 2 lot.
And this is where, you know, patience is important. I think this is going to be quite shortable, but I wouldn't rush to short it yet because of UB at the top of NQ. YM, I think, can have another push. And I personally wouldn't want to be shorting here, grabbing a handful of ticks and getting out when I believe it's going to push up a little bit more.
Am I crazy, or do we have pretty low volume for today in ES?
Yeah, it's mildly low. Yeah. Look at this, it's hanging out here. Still a little bit of upward pressure. Yeah, volume is building. Going to have another push. YM, I think, is the thing to watch. Yeah, 135 is not enough volume. But it's too much volume, rather. Hello. Language to Lee, come in.
Not enough, too much. Same thing.
So 21.5 is a previous high, which is here on the daily. Could that be something that bounds us? Ultimately, I think we're going up, but we know, you know, we're not going to go up forever today. We're not going to retest the all-time high today.
You mean markets don't always go up?
No.
Who knew?
Sometimes they go sideways.
Oh, yeah.
In all the chop.
Indeed. The untradeable chop.
Yeah. Chops. Price trajectory at the bottom and pullback. Yes, that's true, Trifoni. Some of my screens are rotated 90 degrees. That would explain it.
You didn't rotate your head with them, though. You see, that's the problem.
For fans of ledge breaks, we have price trajectory at the base of the pullback.
Yep.
Other markets giving us clues. The energy
Bottom
is kind of there.
Bottom of the LRC range as well on the 30.
Is it? Okay.
Yeah, it's right there.
You're overlaying that on HAVC?
Yeah, I've just got it projected onto my 30-minute.
Okay. So even 15-second, you can see here it's ebbing and flowing. The top of the range is not too high. I was thinking about playing, just putting a limit order in at 19.5, but I actually want to close this account on its P&L high for the day, so I'm not going to do that. Don't want to get caught by intraday unrealized trailing drawdown. I hate that rule. But look, it's going to break up. Watch YM. I think YM is going to be our controlling factor. This UB at the top of YM is 830. Maybe we blast through 50 and it goes up to another big fat round number. We'll see. But I'm mindful of the ATR being 24.5, some historic zero prints on 30 minutes just above that. And we've only been going in one direction all morning. There's a UK musical reference for you.
I was going to let that go.
Yeah, I would as well.
I'm trying to get long in my sim on your behalf.
And you can
there it is.
The big negative delta just pushed up by 2 ticks, 19.75 in the pullback, dropped down to 19.25. Both of these are decent places to get long. And yeah, we might see a little cheeky sweep down, but ultimately I think we still have to break further up. Look at YM, it's coming. I'll do that. We can scalp there. If we can get a fill there, we can get 2 or 3 ticks out of it. Okay, immediately on side. I'll take 2 ticks from this. There we go. So that's how the structural guy scalps. Boom.
I think there needs to be a meme about that. But bro, do you even scalp?
Look, it's presenting another opportunity to do it again. It might have a little tease push down to shake a few people out. But YM hasn't gone there yet. RCY, I guess, gets interesting around there if we're looking at some arbitrary range, 69.7, 70, which is where there's some big negative delta. How funny is that? Yeah, why is that at the bottom of the range? Because there's negative delta. There's not negative delta because that's where the price is. The price is there because there's negative delta, and the passives are holding it. That's good to hear, Amy. Now we just have to work on your spelling. Oh, I'm sorry.
Oh.
Oh, that was uncalled for, but that was I couldn't help it. If you're going to throw them up in the air, I'm going to hit them.
You are razor sharp today. Must be prepping for your meeting in 20 minutes or 10 minutes, whatever.
Something like that.
Got to go do battle.
When the going gets tough.
The tough get flat?
Something like that. Right. aside from professional life, there's enough going on in life. We're moving house next week, and there's a few legal processes ongoing. We're litigating against a couple of parties, so things are razor sharp right now. Fools are not being taken gladly, and the devil in me doesn't mask this, I'm afraid. So if I offend, I'm happy to be called out, and I'll apologise. But it's fun, and it's all meant in the best possible way.
If I offend, get over it.
Wow, this is really slow, isn't it? So look, we will
really
do hard
has.
stop at the top of the hour.
Yeah. This is why I love not being in the markets anymore at this time of day.
Yeah. And
don't have to deal with this.
Foundation members, we're going to go through this approach, like what JVC's been doing, the stats that Robert has kindly put together on his own initiative. Well, yeah, we're not going to go deep dive, but we're going to riff around. Here is how you can take advantage of knowing statistical behaviors, just like we know about on the initial balance break. But how can you get your mindset into exploiting these statistics and make a living from them? So we'll sow some seeds in that. And if you're struggling with looking for opportunities or over trading, or your trading's getting worse the more time you spend at the screen, this will, I trust, provide some food for thought. That's going to be our theme. Structural foundations when we wrap this up.
Sowing the seeds of stats. Isn't that a song?
Oh, fantastic production on that number.
Yes.
Was that Trevor Horn? I don't think it was.
I don't actually know.
No, I don't think it was. I'm Googling while we're waiting for this.
Of course you are.
This epic song, Sowing the Seeds of
Love.
Producer. Production. Clive Langer, Alan Winstanley. Not familiar with them.
I wonder if they're one of those groups who always used consistently the same producer and had a long-standing relationship, or if they just mixed it up.
Blimey, they invited Elisa Adams on it. That seems to be her break.
Oh.
Gosh, history of music's interesting. Price trajectory again, the bottom of the pullback on ES. So that's what, just above 17.5. Some historic price trajectory there on 30 minutes as well. We could trade that long again.
Right at the previous period high as well.
Yeah. Crazy, isn't it?
Tis. And now we're getting interesting. Wow, it's just started wiggling a lot.
Yeah. And in preparation for top of the hour, it might be the top of the hour. Yeah, we're either going to break it, come down, and top of the hour is going to start to come down. Have we got any? We don't have any runs of single prints, but I think once we find what's high enough, it could be 22.5, could be 25, then I think the rest of the day will bounce around this range.
Cool.
Or the top of the hour is going to be the push, and then we head down. So, if you're so inclined to fade the edges, be an outside in person, the time is approaching, I would suggest.
The end is nigh. Here comes our push. Here we go.
And watch Mayem. This is the interesting one for people who are, well, in part this is why I changed my fishing trip screens up, just to show you predominantly domes. So you get used to scanning horizontally and looking at all the correlated markets. It's useful. Thanks, Stephen. What about the typography and the color scheme? So, okay, we've had our push. YM still
There
haven't
we
gone
go.
yet. Yeah, 21. Look, tick beyond this previous high on the daily. This is why I bookmarked them. Yeah, we can still go a little bit higher. It's not a price trajectory there yet. NQ is having another push. YM is not there.
I got my sim ticks. I'm happy.
Yeah. The only reason I'm not trading this is literally I am done for the day on this account, so I don't want to throw anything else in.
Is that a combine account?
Yeah.
Yeah. Is it a consistency rule?
It's at the P&L high, so I just don't want to.
Don't want to mar it.
Yeah, not that I need the drawdown, but just on principle, I don't want to reduce my available drawdown if the trade goes against me.
Yeah.
This
Smart.
It's Lilo Express. It's it's 6K over 10 days.
Yep.
And I've taken just over 2.6K on it. So I've made the rest of I like to start them off with a big day because then it reduces the pressure, especially on the time restricted ones.
Yeah, because they don't give you a consistency rule, so you can do that.
Yeah. Okay, so look, new period's just opened. We've only got one tick of excess at the high.
And 194 contracts.
I want to trade YM up.
Quick, switch accounts.
Yeah, NQ has UB at the high. You see the ATR is in proximity.
Here goes ES.
Yeah.
Yep.
Okay, so look, now YM has got there. We'll give this another minute or two, just see what happens. ES needs to go a little bit higher. NQ needs to go a little bit higher. Not to say you can't scalp it down, but I personally don't want to dive in front of this train for a scalp down. I want to short it when it is telegraphing to me, yeah, I've had enough. Yeah, Amy, Lilu is Apex is a clone of Lilu. I think there's some animosity between the firms. Bulanox is also a clone of them. Same web platform, very similar rules. So don't know what the history there is, but people are. Yeah, there's a fight going on in that particular bar. Both Lilu and Apex come from ranching backgrounds. What that means, I don't know, but I know that is where they come from. It means they both like creamy dressings on their salads.
Exactly.
Order filled. Target filled.
So I am mindful that my doorbell is going to go imminently. So JVC, you're welcome to take this on if you like.
We can start to wrap. That's fine. If there's any questions, now's a good time to throw them in. Otherwise, we will wind it down and get back to our lives. Thank you for coming, everybody. All the Facebook group folks or those who...
If you're a guest and you'd like to learn more about TRG, please visit our website, tradingresearchgroup.com. You can ask us questions. We'll answer you as factually as we can. We'll give you some tough love. You may not like it, but you see what we do, day in, day out in our trading. And delightfully, we have got a whole bunch of members who've been through the approach we take, and it's working for them. They're passing combines, they're making money consistently, which is great. It's very fulfilling. So thank you for coming. For your guests, you'll have seen some Facebook group. Trevorn in the Caribbean, have a great day. I'm getting to understand the Caribbean in more detail through some corporate stuff I'm setting up there. So good stuff. We will wrap it here for now. Structural Foundations members, I'll see you in 30 minutes. TRG people, I'll see you in the pit. And Facebook guys and guests, we'll hopefully see you on Facebook and maybe at a later date within TRG, which would be
indeed
wonderful. So thanks, everyone, and we'll see you soon.